Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Monday, December 20th, 2021. Final week prior to Christmas. Then we have 1 week between Christmas and New Year's, and then the new year 2022 is upon us. What the markets are doing today is not pretty, but I will say this. The markets have rallied off of their lows. S&P is still down over 1%, as you can see. This is the intraday 10-minute chart. It started with this kind of dribble lower, slow bleed lower. We then got a little chop around the lunchtime period and then a slow move higher into the end of the day. Notice the high of the day right here. Where are we? Right there. This is where we opened. The markets close in just under 10 minutes. So isn't that kind of weird? I always find that fascinating when the markets open at a certain level, and then in the final 10 minutes, you're literally back to that level, as if the markets, even though they chopped intraday and did what they did, ultimately they're right exactly where they opened the day into the end of the day. Now, we are pushing above. I do think if we close above, it's a small bullish signal going into tomorrow. Granted, if we wake up to Omicron negative news, additional negative news or something like that, it could be, something that reverses the market back down. But all things hold the same into tomorrow. A close above that line would be positive. A close below may be neutral to slightly negative. Just the fact if we close below, we're going to be still pretty close to the highs, considering I doubt we see a heavy sell into the end of the day in the last few minutes here. Generally, again, I would think that it's neutral-ish to close just below, would be a positive to close above. All right, so the driving factors after the weekend is that the Omicron variant is spreading very quickly. Cases are certainly rising. Lockdowns around the globe are occurring. Even though the U.S. isn't locking down much, there's still obviously a lot of worry about the spread. Is it going to keep people home? And therefore, that's going to hurt the economy. With the Fed not able to print as much money, that's a problem, right? So again, remember what I said to you guys. If this was a year ago, if this was a year and a half ago when COVID first struck, the markets wouldn't care about the Omicron variant because the Fed could come out with bazookas blazing and print trillions and trillions of dollars. With inflation north of 8% now, they cannot do that. In fact, they're actually going the opposite direction and pulling back on stimulus. So that is the issue here. It's not the variant itself. It's the combination of the variant with the lack of Fed stimulus and really government, right? We heard from over the weekend that Manchin's not going to vote for the Build Back Better plan, and therefore that's basically dead. So that was another $1.75 trillion that was inevitably, if it had passed, would have gone in as stimulus into the system. Now that is getting taken away. So remember, you have a scenario here where it makes perfect sense why the markets have been falling. You have the Fed pulling back. They're going to, by March of next year, have taken $1.5 trillion per year out of the system. The government was pumping checks to Americans, sending them out in the mail and spending. Now the government's kind of stalling out on that front. That's going to take away money from the market as well. And all of these things are coming to basically affect valuations. You can't value stocks at ridiculous valuations when the printing stops. Essentially, the merry-go-round is stopping. It's not stopped yet. I want to be clear on that. It's just in the process of stopping. All right. So again, this is the intraday spiders chart. Another nice sell-off, down 1.1% on the S&P 500 for the day. Let's flip to the daily chart. Look at this, guys. So not only are we off the lows with a nice tail there. Now, by the way, this is not a bottoming tail. Bottoming tails must occur at the lowest point in recent history. There was a lower point over here, which was basically a month ago. So just be aware of that. Having said that, you still kissed this double bottom right here and this upsloping trend line. I would have liked, in a perfect world, to hit that level. All right, I always like when levels get hit versus kissed, because when they get kissed, there's always a chance that it comes back down to actually hit that level. It may not, but you're kind of left with that void of not 100% knowing if support has truly been tested and therefore price is ready to bounce back. We are seeing, again, markets trading down, starting to trade up again almost to the highs of the day. We'll check back in on the S&P. If we do have a little bit of a rally here, it wouldn't shock me. Again, I think I said this in the Verified Live broadcast last night, is that you have to understand we're going to get lighter and lighter volume. Volume today is still very good. 85 million is amazing for the week of Christmas, right? But as we get closer to Christmas, you have to assume a lot more of the institutions move away. And if there are some individual investors who are still looking to buy the dip, that could be the catalyst for neutral to upside bias on the markets going into Christmas, maybe the week between Christmas and New Year's. Okay? Flipping over to the QQQ chart here. All right, let's do that. Q's not quite as big of a bounce off the lows, but nonetheless, the interesting thing about the Q's chart here is it actually made a lower low here. So again, remember the spiders chart I just showed you guys? We hadn't taken out those previous lows, even though we came close to this upsloping trend line. Here the Q's actually did, but they are recovering and have recovered and are trading above that pivot low. That puts the Q's, at least at this point, in a slightly positive bias over the next few days. If we had closed below this low here, then you would assume you're going down to this level, which is around 370 to 373 or so, another $7 to $10 to the downside from where we're currently trading. Okay, overall, I'm still in the camp that it wouldn't shock me to see a little bit of a float. I don't think there's a lot of upside in this market because, again, I think ultimately we're headed lower. But again, going into these next couple weeks, or this week and then next week before the new year, I'm in the place of saying, okay, again, the big players could be taking vacations. In fact, I'm going to be away on a cruise in between Christmas and New Year's. You might say, well, what the heck, is he crazy going away with Omicron and everything? Maybe I am, but it was already scheduled, and, I'm going to do it. We'll see how that thing goes. But just a heads up, I will still do daily analysis videos. I will still post trades. I'm just going to get away and relax a little bit. Even if I stay in my cabin in my bed, that'll still be a great thing. You might say, well, that sounds crazy, but when you have two young kids that come in at 6 in the morning every morning, staying in bed on a cruise ship sounds pretty darn good when you can just stay in bed for a long time. Anyone with kids out there will understand that. All right. And yes, of course, I love my kids. They're amazing, but you still need a break here and there. Okay, so again, nothing changes with you guys in Verified Investing Alerts. Still going to be posting alerts, still going to be doing the daily analysis video as well. All right, so we'll see what the spiders do here and the Qs do into the final couple minutes of the trading day. Right now, we have about 3.5 minutes left. The big moves of the day, I did add to my TNA position, which is the Russell. The Russell's actually had a very good bounce off the lows. We did tag this lower level, which is really why I wanted to add. So if you see this low pivot right here, notice that low there. We now have a short-term low pivot. Again, arguable, again, if it's a bottoming tail. It does match on a candlestick basis, but the question is this far enough back in time to still make this a valid one? And that's kind of up for debate, like how far do you go back on the chart? Usually I say 6 months. What's interesting about this is, and that's only when you're talking about the daily chart, by the way, 6 months on the daily chart. What's interesting about this is it's almost exactly 6 months. So this was mid-July, and here we are in late December. So it's kind of borderline that 6-month period. But nonetheless, bottom line is it's had a good bounce off of the lows. TNA, let's do a quick check on that. TNA is now at 74, so that is a nice bounce on the TNA. Our average is 74.40, so great add there today, bringing the average down. The Russell remains extremely oversold. I do think it bounces back. I've been noticing some of the small caps are starting to find a little bit of a bid, even with the overall indices moving lower today. All right, so again, just keep that in mind. All right. The other thing I did today was I picked up Citigroup. We're now in the money on Citigroup. I did a 2% starter position as it's a big company, as I'm not really worried about it going down too much. But look at this pivot right here today. And that tells you everything you need to know why I picked it up today. Beautiful pivot, short-term oversold. Look at this dip here. Bank stock, it will move with interest rates. Interest rates seem to have bottomed out a little bit today in terms of short-term downside. If we start to get a little bit of a bounce on interest rates, then I think you will see the financials outperform short term. So that kind of should answer any questions in terms of why I decided to pick that up. In addition, the 10-year yield is actually up today. It started down and turned around and went green. I'm still in the camp that eventually we take out 1.75 on the 10-year, which was the previous high in the last year or so, and we will go to about 2% on the 10-year. All right. Now, again, it's going to be a whippy wild ride, but I do think we end up going there. Markets are just about to close. I'm going to flip back to the spiders here just to kind of see where we are. And look at that. We are now only down 0.99, now 1% on the spiders. If we flip back to the intraday chart, look at that. We're right above that trend line going into the last couple seconds here of the S&P market, or the market overall. We're now inching back down. Look at that. just fun to watch here into the end of the day. There's the high, and we're literally now pennies, literally within a penny or two of the exact level we opened the day on. The one weird thing about today, and I'll just point this out, this is more for day traders out there, but it's kind of an interesting little note, is that the S&P 500, when it was selling off today, was going down very, very slowly. In previous sell-offs, you've seen much sharper drops, then big pops, then sharp drops, big pops, and then kind of fallovers. This was a much more controlled move down. Not controlled in that, and by the way, there's the call. Wow, look at that. Virtually to the penny. Wow, that's just weird. That's the way the cookie crumbles. And maybe I was just gonna say I didn't mean to imply that it was computerized control, but maybe it is. How controlled this kind of grind lower was, and then the grind higher again, and then the fact that it closed to the penny basically with the open/high of the day right there. It's hard to not think that has some sort of computerized control to it. But in all fairness, with 95 million on the day, that's very, very unlikely. Now, it's not to say there's not computer programs in there. There is. But, that takes impressive amounts of money to control the markets that much, which I don't think anyone pre-Christmas is really looking to do that much of on the institutional side. But just kind of cool to see. Really kind of cool to see there. All right, going back to the daily chart, the S&P, again, nice little tail there. Not a bottoming tail. We talked about that because it's not a new low. Russell, we talked about it, kind of the same thing, although the distance is a lot more, so it's closer to a bottoming tail, and obviously the TNA we picked up today, as well as Citigroup. All right, couple things I want to go over. So I do want to go over Bitcoin. Bitcoin's kind of a fascinating chart here, so bear with me as I go over it. I'm going to use my other chart here because, honestly, it's just awesome. This is just such a great chart, and this shows the 24-hour chart of Bitcoin 24/7. This is the daily chart of Bitcoin, and again, you can very clearly see, and I want to show this to you because I don't know if I've shown this to you in particular, but here's your head and shoulders, and this is a call that I had made back in earlier parts of this year. I saw this head and shoulders. It was a beautiful head and shoulders, and that's your neckline. And when it broke, I called a target based on the calculation of finding a target to 30,000. It went right there, right? Well, from the break point, the measured move from this high to this line equals the measured move from here to here. Now, what's scary about Bitcoin is that it's creating this pattern again, all right? And again, is this a head and shoulders pattern starting to form? Shoulder, head, shoulder, and here's your neckline, right? And what's scary about this is this distance, which is dropping that plumb line to there. If you replicate that distance, you're basically taking it down to 17,000, 15,000. Again, I haven't done the exact calculation, but it was right in that range. And that's a freaking crazy drop. That is a big time drop on Bitcoin there, potentially. Now, it's potential because we don't have the right shoulder completely formed yet. So you have to respect that. We'll watch that again. But if it does form and it creates a nice shoulder over here, then yeah, you have to be fully aware that that's a decent possibility. And it makes a lot of sense if you compare it to, the same type of things occurring with Bitcoin and cryptos that happened with the dot-coms. Remember, in the late 90s, dot-coms were the new thing. The internet was the new thing. It was the average person like me was finally able to get on the internet, even though it took like 5 minutes on AOL dial-up to get on. You still could get on. You could surf. Granted, it took like a minute to get a web page up, but still, it was like this new frontier. It was exciting. It was going to change the world. Now, blockchain, that's what's going to change the future, right? That's what's the new thing. And the same fluff that you saw with all those dot-coms is representative in the crypto market here with so many different cryptocurrencies. Now, I always say to people is that, remember, Amazon was during that period. It was trading in 2000 at $110 a share, went to $5 a share when the dot-coms collapsed. Well, now where is it trading? 3,300, 3,400, whatever it is, 33.41 per the close today. The point is, it went from $5 to 3,300 now. Whatever ones survive that washout. Now, 95, maybe 98% won't, but whatever's due, that's going to be the trade of the next decade. So there, in my opinion, that's my humble opinion again, but that's my opinion that you will see that even if you get a washout. So let's just watch it and see. I still wouldn't be surprised if Bitcoin goes up a little bit before it finally breaks down, because if it's going to form a good shoulder, you need it to go back up a little bit before it rolls over. But again, inevitably, you're going to have a flush out in these cryptos. There's just too much fluff and too much nonsense in the space at this point. Okay, Let's go back to the markets here. So we touched on that. Let's take a look at gold, the GLD. GLD did pull back a little bit today, but not a ton here. I mean, again, we're still stuck in the middle range of this wedge pattern. The wedge pattern continues to just be an absolute beauty here, connecting the lows, connecting the highs, and here we are right smack in the middle. The big breakout occurs when we take out this level, tends us right up to this double top. I still think it's coming. Nothing in the gold market has changed. Yes, the Fed is tapering. They're threatening to kind of stop printing and raise interest rates. It will never happen fully. Yes, they might taper 100%, but then the next crisis will come before they raise interest rates significantly, and they'll have to start printing money again. It's just a game, it's just something that's inevitable at this point. They've kind of made their bed and have to lay in it. In fact, we all have to lay in it at this point, as I've said before. Looking at silver, the SLV, same kind of thing, a little bit of a pullback here on silver. You can see here, big bottom right here on silver, now a retrace. If you're an interested buyer on silver, this gap fill here would be the place at $20.40 on the SLV. There should be some support there. As long as this little double bottom holds, that is a short-term low on silver. Lastly, oil today, guys. Oil did see a good sell-off today. Earlier in the day, oil was getting absolutely crushed. By the end of the day, it did come back decently, but still down on the day. Nothing new here. This bullish pattern, which we talked about on Friday, no longer is very good with this big down move. So again, this bullish pattern was potentially signaling a move up here. With today's action, I wouldn't really give that much credence any time more, all right? Let me see. Anything else on the radar? I don't think so. I think for the most part, I was disappointed in Chinese stocks. Granted, the markets were down sharply today, but Chinese stocks, again, just very, they just got hammered equal to or more than the market today. A couple stocks like TIGR didn't do too badly on the day, but then you had other names like, like Bilibili, which was down 11%, Baidu down 3%, Alibaba down almost 6%. So really, again, it's just part of it was the Hang Seng got smoked last night on the back of the Omicron and all this other stuff. But I mean, it's just not a pretty picture at this point. I don't know how much of it is end of year tax loss selling. Then I'm sure there's other couplings of the regulation. We still need to see some light at the end of the tunnel. I think that personally will come about when you get new information on DiDi's delisting. So again, DiDi was down, by the way, 6% today. And that's not that big of a move. But the idea here, and if I go to the DiDi chart, it's kind of right back to these lows, is we know they're delisting. We don't know the terms. And so as an investor who's intrigued by China plays, you want the terms to be favorable to investors who invested in DiDi. So what do I mean by that? Well, Goldman's handling their delisting. That's a good sign because Goldman was one of the companies that brought them public, okay? And that means that they probably don't want to screw their own investors who bought DiDi when it went public. So that's a positive, but the question is, there's multiple ways it can go. Number one, it can just delist to the pink sheets, which isn't that big of a deal since you can still buy and sell it on the pinks, the over-the-counter market. Granted, there are certain accounts, like some of the members in the chat were saying in Canada, you can't buy it if it's not listed on the U.S. major exchanges. So, there would be some buyers out there that wouldn't be able to do it, but overall it's not that big of a deal because you can still, as a U.S. investor, still hold the shares, and if the company does well, especially if they get out from underneath the boot of China, it could do very, very well. Another thing could be a going private, so they could buy back. They sold about $4 billion in shares at $14 a share when it went public. If DiDi came out and said, hey, we're going to pay $12 a share, which is just $2 below, I don't expect them to pay the IPO price. That's not going to happen, right? But could they say $10 or $12 a share? Yeah, and honestly, then you have a very low value on DiDi, and it's going to go up big, which is going to lift the whole Chinese sector. And a lot of these Chinese companies, investors are going to say, oh, well, if they're going to pay a 40 or 50% or 60% premium on DiDi shares, then Alibaba should be valued at that, all those things. So that would be a positive there. The one negative would be is if it just gets listed and then, it only trades on the Hong Kong market, which there are U.S. brokers that allow you to hold shares. And by the way, you actually can convert your shares. There are certain brokers that allow you to convert your shares to Hong Kong shares. The Hong Kong of so like Alibaba trades on the Hong Kong market. You could call your broker and say, hey, I want to convert my Alibaba shares to the Hong Kong shares, and they would do the conversion for you. But there's also a lot of brokers in the U.S. that do not have access to the Hong Kong market. So that would be the worst case scenario for DiDi, where they would just delist and it would be like, okay, well, that's it. U.S. investors have to figure it out on their own. I don't think with Goldman Sachs representing them, they will do that. But honestly, no one knows at this point. And that's the clarity that the market wants. The market wants to know what's the game plan. This is going to be a test case for China if they delist any of the other companies out there. Now, the one positive over the weekend, not to get long-winded here, guys, sorry, but was that I did read that the Chinese government is in negotiations with the SEC and the government about, what documents for the accounting have to be given. The Chinese government wants to keep some things private, but obviously give enough for transparency. And then the question is, can both sides reach an agreement? I honestly don't know if they can, but that's another aspect. All right. Other than that, yeah, we'll see what happens. I think Micron reported earnings after the bell. Let's see what Micron is. Wow, nice little pop on Micron here. So Micron getting a bounce after the bell on earnings, trading at $87.65. That's up from $82. So it looks like the semis could bounce a little bit. Looks like Nvidia's bouncing a little after hours on that. Maybe that gives this market a little bit of a lift. Let's take a look at the Qs. Yeah, Qs are actually up $1. Now listen, $1 doesn't mean a hill of beans on the QQQ. Could be totally negative by tomorrow, but at least it's a positive number versus a negative for Micron. We'll see if it can lift the markets tomorrow. All right, guys, have a wonderful, wonderful evening. Thanks, as always, for being members. Take care.